Welcome to the August 31st, 2020 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. With a fast-paced tour, we've got 7 charts to go through this week, and you can find those charts for yourself at NetWorthRadio.com. Just click on this week's program, which is the third quarter McGowanGroup client update. McGowanGroup, a team of 9 serving you with dedication, backed by the world's largest custodian of financial assets, Pershing Bank of New York, and we have a program each and every week at NetWorthRadio.com that goes into more detail. Why do we do this program? This YouTube, be sure to subscribe. This is designed to take you each week to the next level in investment expertise, designed to help you make great decisions. And of course, McGowanGroup Asset Management would love to earn your business. This is also a great video for the non-investing spouse who wants to learn more. And that's one of the reasons we designed it, is for quick client updates, because we want to take care of our existing clients through pandemics. The charts I'm about to show you are an amazing shift. Think back to March, April, and the riots at the end of May, how dark it seemed in the first half of 2020. One of the things we said right here early on is we're going to have a plummet in GDP followed by the fastest recovery in history. Those originally were my dad's words. Papa Dean's Corner of Wisdom is also on the audio broadcast at NetWorthRadio.com. These are durable goods orders. People bought 2 things. They bought new houses and new cars when interest rates went to 3%. I'm going to cover real estate as well as what's happened to the durable goods orders. Durable goods is stuff that lasts over 3 years. Washing machines, cars, planes go into this too, but nobody's ordering planes right now. We've got an update on that coming next week, the air travel and the airlines. There's a warning on the airlines right now. The damage won't be known until next year. And real estate has some damage coming, which I'm about to cover. But right now, this shows an amazing recovery. The recovery numbers are coming in better than expected. The economists are caught flat-footed. Boom. Look at this. Durable goods orders ahead of last year. And this spike that we saw actually says that the economy is recovering faster than anticipated. So we're in a totally different environment. Money flows this week. Abbott came out, said a $5 COVID test, by the way, $5, 15 minutes, FDA approval. They announced that way back when we started to add to the medical dividend companies. And we did that through the pandemic. We added 2 things: underpriced global high yield funds with a great yield and medical dividends that we were adding while most people were tempted to sell. And that has obviously helped us. These are money flows, and this is this week's money flow. We had $2 billion flow out of the largest S&P fund. The FANG index, the technology, first negative outflow we've seen in a while, moving from what is COVID immunity, the technology side, to the cyclicals, and I'll show you why in the next chart. But the healthcare sector was one of the big hauls right here, the 3rd largest haul in of $358 million concurrent with that Abbott announcement. And of course, we've got treatments and vaccines underway, and that is permanently higher medical spending for that category. So that's an interesting category. Real estate had negative outflows. You can see here on the real estate. This is actually from May to the present. And we have net outflows in several key areas. But what we see when we look at that, lots of money flowing into high yield, because yield is going to be important. Money markets are 0. Stuff that pays over 5% looks pretty darn good to investors, especially coming out of the sheer panic that investors experienced in March and April. So next, here we're looking at GDP. what happens after the quarter? Now these are annualized numbers, so you got to cut them by 4 if you want to know what the actual change in GDP is, because they annualize it. But anyway, the economy contracted by about 1/3 in the shutdown quarter. The rebound this quarter has moved. Well, first time we brought it to you, it was 9% rebound. No, it's a 20% annualized rebound. Next quarter, it's 6%. The Atlanta Fed says, oh no, their data shows 25% and 22% economic expansion here in the third quarter and for the fourth quarter. What does that mean? The fastest recovery in history. And investors are likely to shift, as we indicated by the FANG index having net outflows, they're likely to shift towards a more cyclical approach with this, and continued GDP growth through the end of 2021 has also moved up. That is a totally different picture. Be sure that when things change, the headlines are going to be after the fact most of the time. But when these things start to change, that is a wake-up call. Now, when do corporations reach record earnings? This is the pandemic. You wouldn't expect that the Dow's about break even for the year when we had a contraction in earnings. I would say it went too far too fast. We went from $40 a quarter for the S&P index earnings down to 22. Wow, that's a huge contraction, right? Takes it a while to get back up there. This is $45. They're projecting a new high. They're usually a little too optimistic on this one, by the way. But it does say we could reach new high earnings late in 2021. Again, a different picture than what we've been told and what we've seen. Look at the real estate market. Real estate has proven COVID-19 immune for now. Boom. This is the sale of single-family homes, right? U.S. new single-family homes sold. That is a record. You'd have to go back to 2006, which would kind of be in the next room, to find when it was this high. Well, there is a warning built in here for real estate investors. These are delinquencies, right, on the mortgage side. Look at that. 3.77% record low delinquency at the end of 2019. That has more than doubled to 8.2%. Because of the forbearance with the pandemic, those are not likely to be addressed until 2021. So you say, when does residential real estate roll over? It's likely in 2021, evidenced by this tragic chart on the delinquencies. A lot of those will catch up as the employment market has. We did cover the 9 million jobs added. We'll get the figures in September for what August was, and of course we'll update them right here at McGowan Group YouTube. Thank you for tuning in, and each and every week you'll get a notification if you're subscribed when this uploads each weekend. A quick video, a quick tour, and if you want more, NetWorthRadio.com. You can also fill out the preliminary client questionnaire and meet the team that cares by Zoom, or you could come down to the Crescent, get a free temperature check, hand sanitizer, and a free face mask if you come see us for the grand tour. But the Zoom meetings have gotten very sophisticated for clients and prospective clients. It is time to update your plan, especially with what you've seen right here. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.